Good afternoon and welcome to the 2024 Payroll Processor Year-End Meeting. I'm Terry D'Elia, the Director of Human Resources, and I'll be your host today. Joining me is our payroll team, Sandra Clemency, our payroll manager, Kathy Merzinski, our payroll processor, and Rashay Robinson is our newest member to the team, and she serves as your payroll support specialist. We also have Cindy Delacqua assisting us with monitoring questions. We'd all like to thank you for participating in today's meeting. We know it's an extremely busy time of year personally and professionally, so we really appreciate you reserving time to spend with us. And I know I say it every year, but time has really flown. It really seems like just the other day that we were together for the 2023 year-end meeting. And to me, it's mind-boggling that Thanksgiving is just a week from today. There's only 5 weeks remaining in the year and just 2 more payrolls to process. I'm sure that you're as happy as we are that neither Thanksgiving nor Christmas fall on payroll weeks this year. Now, if we could just make sure that these final 2 payrolls and all of the year-end activities get processed with the utmost of care, then we can all rest a little more easily and truly enjoy the spirit of Christmas during that Christmas week. Today's agenda. Nope.
Oh, hold on a sec.
Sorry, everybody. There we go. So today's agenda is going to include a checklist of items for a successful year. A review of the tax forms, important year-end dates, how to handle pay adjustments after the final paycheck of the year has been committed, a reminder about the first entitlement rollovers for 2025. We'll go over the 2025 calendars and templates, and then we'll wrap up with updates for 2025, including tax changes, 403B and HSA limits, open enrollment, and minimum wages. So without further ado, well, actually, before I turn it over to Sandra, I just want to remind you of a few things. First, this presentation is being recorded and it will be posted to Freshdesk within a few days, and you'll be notified of that once it's done. And then we ask that you use the chat feature to submit any questions. And what we'll do is we'll wait to the end of each section to see whatever questions have been submitted and answer them at that time. So without further ado, I am going to turn it over now to Sandra Clemency, our payroll manager.
Hi, everyone. So every year, it's important to review critical checklist items to guarantee a successful year end. Our presentation today covers a lot of information concerning year end and preparing for 2025. Again, for this year, we put together a payroll processor's year end checklist to assist you with meeting important year end tasks and deadlines. The checklist begins with tasks and deadlines for November, so it's important that you promptly print it out. This checklist has been posted in Excel format to Freshdesk to give you the ability to add additional year-end tasks that are specific to your location. Now let's take a look at some important auditing items that you should have been performing throughout the year, but if you haven't done so yet, you will need to review before the last check processing of 2024. Before committing each payroll, it's important to review the Preview Payments tab on the Pay Run Management screen in Payroll. This audit is a quick and easy review validating that only your pay group is listed. Shown here is an example of what seeing an additional incorrect pay group looks like. This is the payroll for St. Michael, but Our Lady of Good Counsel is listed there. It should not be. If you see a pay group listed that is not yours, please contact payroll support immediately and do not commit your payroll until we've had time to research and make corrections. This issue usually occurs when rehiring an employee incorrectly or when choosing the wrong work location on the employee's work assignment. Accepting a payroll with a pay group which is not yours creates issues with payroll funding, the employee's issued paycheck, their W-2, and their Dayforce record. The next important audit to perform in preparing for a successful year end starts with validating payroll data with the first paycheck each January. If you reconcile wages and taxes after each payroll, then quarter to date, then year to date throughout the year, there'll be no surprises at year end. Tax returns and W-2s will be free from errors, and there'll be no need for corrected W-2s and costly amended returns. Remember, Dayforce only remits taxes and files returns on our behalf with the data we provide them from our processing our payrolls. They are not validating our data for us, as that is our job. The IRS's position is that tax liabilities and reporting requirements continue to be the responsibility of the employer, even if they outsource their tax filing and payments to a third party like Dayforce. Your reconciliation should become a permanent record saved with your quarterly and yearly reports. The IRS may even require your reconciliation worksheets be provided to them if they find that your quarterly 941 form totals are not balancing to your W-2 form totals. So what exactly is a payroll reconciliation? Performing a payroll reconciliation is a way for employers to keep track of withholding and depositing of taxes, taxable wage calculations, and validation of Dayforce prepared tax returns. It helps prevent out-of-balance conditions and ensures the amounts withheld, deposited, paid, and reported on agree with each other. Performing reconciliations regularly after each payroll allows for the correction of wage and tax discrepancies with time to spare before the process of preparing and filing quarterly and year-end returns. As I mentioned already, this will save you time and money in the long run from having quarterly and year-end errors. In Freshdesk, you can find a reconciliation Excel spreadsheet template to assist you with this effort. After each payroll, you will record pre-tax deductions, tax withholding, and taxable wages into each monthly tab from the total pages of your payroll summary report. The monthly totals then automatically populate into one of the 4 quarterly tabs on the worksheet, and then totals from the 4 quarters populate into the year-end tab, and the year-end totals then populate into the W-2 tab. Approximately 45 days after the end of the quarter, Dayforce's final quarterly tax returns will be available on the Dayforce tax website. Make sure you're going into IAM, DOS, and then tax images to download and then validate your quarterly and year-end tax filing reports with your payroll reconciliations, quarterly, year-to-date, and W-2 tabs. Any found discrepancies in your reconciliation, any tax notices received, or Dayforce balance as you go and tax code fallout notifications need to be sent to payroll support promptly throughout the year so we can assist you in resolving them before the last check processing. For additional assistance with completing your payroll reconciliation, please view the recorded payroll reconciliation presentation that can be found on Freshdesk. The next audit review you should perform with each payroll is a review of your U.S. wage and tax error report. This report will show you any quarter-to-date or year-to-date employee wage and tax issues. Payroll support also performs a review of this report for the entire diocese after each payroll. We immediately investigate any errors and resolve them with the next payroll commit to ensure quarterly filings are correct. We ask that you please validate that we have addressed all wage and tax errors, as we want to make sure that any and all issues are resolved prior to the last payroll commit of the year. To see if you have any outstanding wage and tax audit messages, go to the payroll module, then archive the reports and open up the errors only wage and tax report. All corrections need to be processed in the next payroll cycle. However, prior period adjustment off-cycle runs can be created if a correction process in the next payroll would cross quarters. For example, voiding of a check that was issued to a terminated employee in error. Voiding the check in the next quarter could create negative quarter-to-date wages and withholdings. These off-cycle runs need to be completed by the last Friday of the quarter, except for the 4th quarter, which would need to be completed by January 2nd. If the off-cycle run is completed after the last Friday of the quarter or after January 2nd, costly amended returns will be needed. Not correcting errors timely can result in the need for W-2Cs, which is a form used to correct a previously submitted W-2, amended quarterly and year-end returns, which all can cost you penalties, interest, and additional Dayforce fees. If you should need to create an off-cycle adjustment run, please submit a ticket in Freshdesk to request assistance. Tax code fallouts are tax liabilities that Dayforce Tax Service cannot process because the tax code is inactive, is invalid, or needs to be set up on your tax code profile with them. Each time your payroll tax data is submitted, Dayforce Tax compares the received data to your tax code profile. Tax data that does not correspond to your profile is held in a suspense account and is not deposited until Dayforce Tax receives documentation from you of your tax account number and assigned deposit frequency. A lapse in providing this information may generate agency notices, the need for amendments, along with penalties and interest and additional fees. Dayforce Tax is required to report all liabilities to the tax agency by the check date when they actually occurred. Consequently, the longer it takes to resolve and pay these amounts to the agencies, the greater the potential for agency penalties and interest. This is why it's so important for you to closely review your employees' address change requests for any states you do not have a state tax account with before accepting it, as state tax withholding is determined by the employee's primary state of residence. Be especially mindful before accepting any terminated employees' address changes requests to an out-of-state address when they are still receiving the vacation payout. Do not accept a primary address change for terminated employees to a state you do not have a tax account with. Wait until their vacation has been paid out before accepting the request. On receipt of a tax code fallout notification from Dayforce Tax, please create a Freshdesk ticket to forward the notification to payroll support for immediate assistance. If the tax code fallout is for a valid state tax account, so in other words, a state that you have applied for account with, please let payroll support know and we will respond to Dayforce Tax for you. Just remember that once you receive your assigned tax number, promptly send the documentation to us so we can alert Dayforce Tax to remit the tax being held in suspense to the appropriate agency. If the tax code fallout is for an invalid tax account, so one where you have not requested a new state tax account for, please submit a Freshdesk ticket to payroll support stating so, and we will research and if needed, reverse the liability through a Dayforce adjustment, as well as notify Dayforce Tax on your behalf. We will also fix the employee's tax definition screen to prevent additional fallouts from occurring and advise you how to avoid this issue in the future. Tax code fallout corrections need to be responded to by the target date on the notification. Responding by the target date will ensure timely quarterly filings. Please note that Dayforce's year-end deadline to resolve tax code fallout issues is December 13th. Please reach out to payroll support by December 6th with any tax issues so we have time to resolve before the Dayforce deadline. Tax code fallout notifications will continue to be sent on a per pay period basis until the fallout is resolved. Each month, you will receive a fallout aging report that summarizes all pending fallout activity for the current quarter. I also would like to mention here that if you receive any state tax deposit frequency change notices, please ensure that you promptly create a ticket in Freshdesk and attach a copy of the notice. We will then forward it to Dayforce Tax on your behalf. If Dayforce isn't updated on your state tax deposit frequency change, they will continue to deposit tax with what they have on file. This could incur late penalty notices from the tax agency. There are two tabs on the year-end module that you currently have access to. The first is the Overview tab, which displays a list of your legal entities or pay groups you have access to. We have taken away processor access to the year-end archive reports, as Dayforce has not yet established security access when viewing these reports. However, reports can be manually generated from the reports icon on the Overview screen. The second tab on this screen is the W-2C tab. A W-2C form is the form that needs to be submitted when correcting an already filed W-2. After year-end filings have been completed, the W-2C tab will become available on January 6th. The W-2 tax form preparation process in the year-end module is performed in a sequential order. Like the payroll module, the circular progress indicator displays the status of the year-end processing for your legal entity or pay group. When you access the year-end module, you will see that the forms generator will be green already because after each payroll commit throughout the year, the forms generator is automatically run overnight. The process gathers all data changes year to date so you can preview employee W-2 forms and year-end reports after each payroll process. After the December 20th payroll has been committed, the final pay indicator will turn green automatically. It is not necessary for you to run the ready for print filing process in the year-end module because on January 3rd, all tax forms will automatically be pushed to the print queue and sent to Dayforce Tax Service for printing. At that point, the file and print indicator will turn from gray to green. If you want to determine when employees have their visibility to their online tax forms, just hover over the status indicator to view the date and time that print and filing was committed. Electronic forms will be available for viewing approximately 7 days from the print date. Each year, Dayforce will start the next year-end process automatically in March, as they assume at this point you're done with the prior tax year. This is where you can start seeing W-2 information for the current tax year, for the current quarter tax year in order to balance the first quarter of 2025 year-to-date to W-2 totals. Before our W-2s are committed for printing, you want to make sure that you have thoroughly audited your data. If you had an off-cycle adjustment run and the W-2 preview has not been run recently, which you can tell by the date and timestamp under the generated on column, you can run the preview yourself by clicking on your legal entity or pay group to highlight and then click on the process job menu and then generate preview. Once the preview data is generated, you can view employee tax forms by clicking the arrow on the top right corner of the screen to open the employee tax statement slide-out panel. If you do not select a legal entity or pay group, the slide-out panel will display all employees across all legal entities you have access to. The left column on the slide-out panel contains a list of employees associated with the selected legal entity. To view the tax form, search for and then select the employee from the left-hand column on the slide-out panel. A preview of the employee's W-2 will display. The form will have preview printed at the top of the form to indicate it is not the final W-2. Please preview one employee's W-2 form now and validate that box B, which is your federal employer identification number, is correct. Choose an employee from each state you have a tax withholding account with and validate box 15 is correct, which is your state tax withholding account number. In addition, please validate your employer's name and address as shown in box C matches how it is registered with the IRS. We want to ensure there are no issues with the acceptance of your location's tax filing. Please have this review completed by December 1st. Each time that you run the Generate Preview process job in the year-end module, validations are performed. Click on the Export Problems icon to export any messages to a CSV file. The errors and warnings must be resolved or reconciled before the printing of W-2s. Unresolved errors can cause incorrect tax forms to be filed and printed. Payroll support does perform a review of these messages for all locations after each payroll, and we've been correcting errors throughout the year. Correcting problems early will prevent Social Security Administration from rejecting any incorrect W-2s. If any W-2s are rejected, it will then be your responsibility to correct and reissue the W-2 for your employee. Dayforce does not do that for us. As mentioned earlier, the year-end overview screen is where you will find the year-end reports icon. Click on this icon to see a list of year-end reports that you can manually submit to run at any time throughout the year. From the year-end reports menu, you will need to generate the final employer copy of the W-2 report after January 6th. We recommend that you run this report and save a copy in your year-end file. On the last page of this report, you will find a summary total page, which can be used to validate against the W-2 tab of your payroll reconciliation spreadsheet. The year-end delivery package report provides a breakdown of where tax forms will be delivered as well as provides you with your package tracking number. The report will not show any employees who have consented to electronic-only delivery of their tax forms. It will show only those employees who will be receiving a paper form copy. Kathy will be going over the employee electronic consent process in the next section of this presentation. Make sure you are reviewing your W-2 management report as well. The W-2 management report provides a picture of each employee's W-2 at the time the report is generated. This report verifies the accuracy of your employees' tax statements prior to printing of W-2s. The report will display errors such as missing Social Security numbers and/or negative year-to-date wage and/or tax amounts. Your end-of-year corrections must be entered on the final pay run of the calendar year. The process of committing the final pay of the calendar year follows the same process as every other payroll, with the addition of the following activity that occurs automatically once you commit your December 20th check. W-2 and year-to-date totals are based on paycheck dated for the calendar year. Dayforce automatically identifies the last pay run of the year for us. A time and date stamp will then appear on the overview screen for the last commit date, confirming that the last payroll of the year has completed. Notify payroll support by December 6th of any needed corrections from your payroll reconciliation and/or year-end module review. This will give us time to include corrections with the last payroll processing of 2024. Changes, warnings, and errors must be resolved or reconciled before the printing of Form W-2 on January 3rd. Are there any questions concerning the auditing and reconciling of your payroll for year-end? Cindy? I don't see anything. Okay, now Kathy will review the 2024 tax forms.
Good afternoon. 2024 W-2 wage and tax form remains unchanged from the 2023 form. Employees who have received paychecks from January to December will receive a 2024 W-2. The form is used by employees to file their 2024 tax return. Form 1095-C is the employer-provided health insurance offer and coverage form. This form is provided to all employees regardless of their eligibility for medical coverage during 2024. It's used by the IRS to determine if an employee is eligible for the premium tax credit or as proof of their insurance coverage. Dayforce can house different addresses for employees. Employees do have the ability to choose which address they want printed on the outside of their earnings and tax statements by flagging the payroll mailing box for that address. When flagging the display on tax statements box, Dayforce will use that address to display on the actual tax statement itself. If the boxes are not flagged, the system will default to the primary address. Please reference this matrix to troubleshoot any address questions that may be asked by an employee. In box 13 of the W-2, the retirement plan box must be checked if the employee made contributions to the 403(b) plan in 2024 or was a participant in the diocesan pension plan for any part of the year. You do not need to update this field. The HR team at the diocese is validating and updating this field for you. Employees may come to you and want to know why they are receiving more than one W-2. Some of the reasons why an employee may receive more than one W-2 would be if the employee has wages and taxes for 2024 reported in more than one state, or if the employee has wages in more than one pay group, or if the employee has wages in more than one clock number for a pay group which hadn't been caught and corrected during the year, or if the employee has more than 3 or 4 items in box 12 or box 14. In Dayforce, employees have the ability to print their current and past Dayforce historical W-2 tax forms. Processors can also print copies of W-2 tax forms by going to People, Statements, Year-End Statements, as well as going to the Year-End module. Employees must consent to receiving their tax forms in electronic form only. There is no default setting to opt all employees out at the same time. Employees must opt out or consent themselves. If an employee works in more than one diocesan location, they will need to consent for each of their login IDs. Terminated employees do not have the option to opt out of printed tax forms. However, they still will have access to obtain an electronic copy. Having employees consent to receiving their yearly tax forms electronically can save you on Dayforce fees and postage. Also, there will be no lost or returned forms. The steps an employee needs to follow to opt out of printed tax forms is easy. They simply go to Profile. Under About Me, scroll down on the screen to Work Information. On the right-hand side, under Payroll Information, go to the Year-End Forms Delivery and click on the pencil icon where a window opens to edit. Select the checkboxes for each tax form the employee wants to receive electronically and click Approve. Printing of the forms is suppressed immediately. Once an employee consents to electronic form delivery, they will receive this email from notify@dayforce.com. Dayforce will send another notification when the electronic tax statements have been posted to Dayforce self-service and are available to download. When forms are available, employees can print their forms directly by going to Earnings Year-End Statements. Page 2 of the printed form will contain all the same information that the paper form has. Take note that page 2 information is not visible to the payroll processors when viewing forms from the year-end module. Employees have the option to revoke their consent at any time. They simply go back to year-end forms delivery and uncheck the box they previously checked to consent. If you want to know which of your employees have opted to receive their tax statements electronically, you can run the report CDA employees opting out of printing year-end tax forms by going to Reporting and Analytics, Reporting and Reports. Dayforce will start printing W-2s automatically on January 3rd, regardless of whether or not you mark them ready for printing and filing in the year-end module. Electronic forms will be available to employees on or around January 10th. Hard copy W-2 forms will be shipped to your location on or before January 24th. You can track your shipping package by going to the Year-End Module Overview tab and clicking on the package tracking icon. Don't forget that the IRS requires that W-2s be distributed or postmarked to employees by January 31st. Remember, employees are now able to download their year-end tax forms directly into TurboTax or HR Block. Dayforce will start printing the employee copy of the 1095-C form on January 17th. Employees will be able to view and print copies of their 1095-C form from Dayforce around January 24th, which is 7 days after the print date. They can find the form under Earnings, then Year-End Forms. These forms will also be shipped out to your location by mid-February. The 1095-C form must be distributed or postmarked to the employee by March 3rd, 2025. Please note that you will not be receiving an archived report of employees' 1095-C forms. Please direct employees to Dayforce where they can obtain a copy of their form. If an employee should have a question concerning their 1095-C form, they should send an email to 1095csupport@arlingtondiocese.org. The IRS requires employers to notify employees when their electronic W-2s and 1095-Cs are available. The diocese intends to fulfill this requirement by sending out this notification to all employees on your behalf via the message center in Dayforce. This is the notification that will show up in your employees' Dayforce message center and in their verified email account. Please take note that the Dayforce print fees remain the same as last year. Dayforce will For your convenience, we have prepared this at-a-glance calendar, so you will have all of these important dates and deadlines in an easy-to-reference format for the entire month of January. Please take note that the Dayforce print fees remain the same as last year. Dayforce will charge the cost of printing all W-2s and 1095-Cs to the Central Administrative Office, and we will, in turn, pass that cost along to each location through your diocesan monthly billing. These charges will more than likely be seen on your March or April billing. As a reminder, you are not billed separately for year-end federal and state tax filing fees or the year-end solutions fees. These fees are part of your monthly per employee subscription fee. Are there any questions?
I don't see any questions.
Okay. Now Rashay will go over important year-end dates and deadlines.
Hello, everyone. Since year-end is such a busy time for everyone, it is important that we plan ahead to ensure that we have set enough time aside to accurately process our last few paychecks of 2024 as well as other year-end tasks. As you can see from this calendar, the last day to key employee maintenance for pay period 25 is Sunday, November 24th, and blackout will begin on Monday, November 25th. The Central Administration Office will be closed for the Thanksgiving holiday beginning Wednesday, November 27th at noon through Friday, November 29th. Payroll support phone line and fresh desk tickets will not be answered during this time, and voicemails will not be checked. Due to additional time being taken off around the holidays, please remember that you should never hand out paychecks to employees prior to payday for these reasons. Since our paychecks are drawn off Dayforce bank account, paychecks will not be honored if deposited or cashed prior to payday. Checks deposited prior to payday will be denied for payment. Dayforce charges your location a fee for each check that is deposited early and denied for payment. You will need to contact Dayforce Payment Solutions directly if any employee's check is denied and returned. This causes a greater inconvenience for the employee, as they may have a difficult time recouping their pay, especially around the holidays, and they could possibly bounce checks for inefficient funds and acquire additional bank fees. Please encourage your employees to sign up for direct deposit, especially around the holidays, to prevent any delay in receiving their pay timely. Now, this is the time to start thinking about processing year-end or Christmas bonuses. Last week, Terry has sent an email to all pastors and principals, providing them with helpful suggestions about awarding year-end bonuses, whether in the form of a wage or non-wage payment, such as gift cards. An email encourages them to give you significant time to fit bonus processing into your payroll processing schedule. We will be sending out a payroll bulletin providing instruction and helpful tips on how to process year-end bonuses or non-wage payments in Dayforce. We recommend the following: process year payments with the December 6th paycheck, alert management that you need this information no later than Tuesday, November 26th. The most effective and least labor-intensive way to process year-end bonuses or gift cards in Dayforce is to include these amounts with the employee's regular wages. Key amounts in Dayforce as far as head of payroll deadline as possible. If errors are found, you have one last payroll in 2024 to make corrections. If bonus is added to the December 20th check, please alert management that you must have this information no later than December 12th. Encountering an issue with bonus payments at the last minute may not provide us with significant amount of time to assist you before payroll commit deadlines must be met. Any bonus requests received after December 12th should be included with the first check of 2025, as there will be no opportunity for the creation of any year-end off-cycle payroll producing pay. All active employees will receive the year-end informational memo through the Message Center in Dayforce. Employees who have their emails verified in Dayforce will also have this notification sent to their verified email account. Once this notification has gone out to the employees, payroll support will post a payroll alert in Freshdesk, letting you know that the notification was sent with the suggestion that you send a message to your employees alerting them to check their Dayforce Message Center for this and other information notification. The year-end information memo contains answers to the most frequent asked questions by employees concerning their year-end tax forms and changes for the upcoming year. The IRS requires each year that we remind employees to submit a new form W-4 if their marital status has changed or will change next year. Also, Virginia and Maryland have annual notification requirements to employees regarding their earned income tax credit. By sending out the employee year-end informational memo by December 1st, we'll have met these notification requirements. Now, all employees are required to complete a 2025 W-4. Employees with a valid W-4 form on file are not required to submit a new W-4. Dayforce will continue to calculate and withhold taxes in accordance with elections on file. However, employees hired or rehired after January 1st, 2025, or any employee submitting tax changes in 2025 must use a new 2025 W-4. Also, employees who claim exempt in 2024 and who will continue to claim exempt from withholdings in 2025 are required to submit a new 2025 W-4. The IRS requires that every year we reach out to any lay employees and clergy who claim exempt from withholdings and remind them that they must submit a new tax form for a new tax year. All federal tax records claiming tax exempt in Dayforce will automatically have an effective end date of February 15th of the next tax year entered on their record. To ensure that employees' exempt status does not expire, you must ask that a new 2025 W-4 form claiming exempt be submitted between January 1st and before blackout begins for pay period number 5. If a new tax form is not submitted by the beginning of blackout for pay period number 5, Dayforce will begin withholding taxes on the February 28th paycheck based on the last valid W-4 on file for the employee that does not claim exempt from withholdings. If one does not exist, withholdings on the February 28th paycheck will be as if they claim single with no other adjustments. If a new exempt W-4 form is received after the payroll processing for the February 28th paycheck, per the IRS instructions, do not refund any withheld taxes while the exempt status was not in place. Have the employee submit a new 2025 W-4 form online in Dayforce. If you have an employee still submitting paper tax forms, we suggest that you submit the electronic tax form in Dayforce on the employee's behalf. In the signature box of the electronic form, key the phrase entered from paper form submitted by employee. Dayforce has programmed a field on their electronic W-4 tax form for the employee to key the word exempt, as the IRS instructions for the paper form is to write exempt in the space underlined 4C. This slide shows Virginia, Maryland, and DC annual requirements for completing new tax forms for those employees claiming exempt from state tax withholdings. It is important to remember, when in receipt of any employee's exempt Maryland tax form, whether electronically or by paper, you must also remember to go to the Maryland Local Tax Code found on the employee's tax definition screens in Dayforce and check the box next to exempt tax only update wages. If you don't, the employee will continue to have local Maryland state tax withholdings. As of this presentation, the 2025 form is not available yet. When an exempt state tax form is submitted for the state of Maryland, Dayforce will automatically generate an end date to their tax record. Whereas for the state of Virginia, Dayforce will not automatically end date the exempt tax form, but Virginia does require a new exempt tax form be submitted each year. To make certain you are in compliance, if the employee does not submit a new Virginia form claiming exempt from withholding, you will need to manually key an effective end date of January 1st to the employee's Virginia tax form in Dayforce. To assist you in identifying which employees are claiming exempt from federal and/or state tax withholding, you can run a report named CDA Fed and State Tax Exempt Report, All Employees in Dayforce. Documentation with instructions on how to run and read this report can be found in Freshdesk under Dayforce Payroll section of the knowledge base. Remember, for a quick find, use the search bar in Freshdesk and just search the report name. We will be sending a reminder to you December 18th to run this report. To ensure the 2025 W-2 and 1095-C tax forms are issued correctly, this past week, we have sent all employees a reminder to review and update their personal information in Dayforce. You were also sent a quick tip bulletin outlining the importance of not keying certain characters in Dayforce. Please remember the date of when you commit your payroll that will affect when paper paychecks will be delivered. If you plan to be out of town for the holidays, ensure you have arrangements in place for someone to be in the office to collect the delivery and handle paycheck distribution on payday. As we discussed earlier, please do not distribute paychecks prior to payday. The Central Administration Office will be closed December 23rd through January 1st. However, since Monday, December 30th is a payroll processing day, payroll support will be working that day. Please note and plan ahead as all payrolls must be committed by 5 p.m. on this Monday. In the case of a payroll emergency, payroll support will be monitoring Freshdesk tickets from 8 a.m. to noon on Monday, December 3rd, and on Friday, December 27th.
The 23rd and the 27th.
The 23rd and the 27th. And we will only respond to payroll processors who have an urgent issue that cannot wait until we are back in the office Monday, December 30th. Now, let's take a closer look at important deadlines in December. The employer health saving incentives will be added to Dayforce and will process with your December checks. A payroll alert will be sent soon and will include instructions on how to validate the total amount of employer health saving incentives added to your payroll prior to accepting your December payrolls. Employer paid incentives and employee contributions to the health saving accounts must be reported on the W-2 in box 12 with the code of W. Don't forget to include employer incentive amounts with the employee's contribution on your payroll reconciliation monthly tab for the month of December on line 42. After committing the November 22nd paycheck, report any payroll reconciliation issues to payroll support as soon as possible so we can include any needed corrections with the December 6th or December 20th paychecks. Ensure that all Dayforce tax notifications have been received and have been answered, and all 2024 voids and on-site checks have been entered into Dayforce before December 9th. The committal deadline for the last paycheck of 2024 will be a normal schedule and must be committed no later than Tuesday, December 17th at noon. The deadline for employee submittal for changes to the 403B and HSA contribution for the first paycheck of 2025 is December 16th. Keep in mind that blackout will start up again on December 19th through the payroll committed of the January 3rd paycheck. Therefore, all employees' maintenance must be keyed right after you commit your December 20th paycheck up until December 18th. The earlier you commit your payroll, the more time you'll have to key employee maintenance for January 3rd, 2025 paycheck. Do we have any questions?
Yes. Please confirm that the exempt end date for Virginia is January 1st.
Virginia doesn't have a specific date. It just says you need a new form submitted yearly. So that is why we have the January 1st date.
That is the question.
Now Sandra will go over how to handle pay adjustments after the December 20th paycheck has been committed.
Now we're going to go over how to handle major paycheck errors discovered after you've committed your December 20th paycheck. With office closures and other year-end processes taking place, there'll be no off-cycle payroll runs producing pay for year-end after the December 20th paycheck has been committed. Therefore, it's critical that you allow enough time to validate and audit your last paycheck processing of 2024 very carefully prior to committing it, as it will be difficult to provide corrections promptly to your employees. Please do not wait to right before the payroll deadline to enter bonus or year-end adjustments, just in case you require assistance for payroll support. Please allow us enough time to assist you. With that said, if you do discover that a pay adjustment is needed after your final paycheck of the year is committed, keep in mind that depending on the timing of when the error is discovered will determine if the issuing of a W-2C to that employee will be required, as well as amended tax returns. If you discover that you grossly overpaid someone on the December 20th paycheck, contact Dayforce Payment Solutions immediately by submitting a request to delete or reverse a direct deposit or place a check stop payment. Forms can be found on Freshdesk under the knowledge base under templates and forms. After December 31st, Payment Solutions will only accept requests made online in IAM in the Dayforce tax module. For additional information on this process, please search in Freshdesk for previously recorded presentation titled Overview of the Dayforce Payment Solutions in Dayforce Tax, and go to the section titled How to Make Requests to Payment Solutions for additional information. Please do not void or make any check entries in Dayforce after accepting your December 20th paycheck. Please reach out to payroll support on December 30th for further direction and guidance on how to correct the employee's W-2 information. The steps on this slide are reserved for payments to employees who did not receive a check at all or whose check was substantially less than owed for the December 20th paycheck. First step is to key any needed timesheet adjustments to the employee's timesheet in Dayforce. Then give the employee a loan in an amount that will cover the employee's needs until Monday, December 30th. You should discuss the appropriate amount with the employee. If the employee did not receive a check at all, the amount should not be greater than the employee's regular net pay. If the employee received a check but it was substantially less than owed, the amount should not be greater than the gross wages owed minus 25%. The check must be produced out of accounts payable and be dated 12/20/24. Then, on Monday, December 30th, process an on-site check in Dayforce for this employee in pay period 1, 2025 for the entire amount owed from December 20th's check. Enter 1/3/25 as the check date in Dayforce. Select retro under the marked as paid out column. This will tell Dayforce to pull in the timesheet adjustments you keyed. Then calculate the on-site check. Check the earnings and edit deductions as needed. Remember to deduct any loan amount given by using the Loans Without Limits deduction code. Click Calculate. Review the check for accuracy. Only print the on-site check if the resulting net pay is 0 or greater. If the results of the on-site check is greater than 0, provide the employee with an accounts payable check for the net amount due and dated 1/2/25. These wages will be reported in 2025. If the results of the on-site check shows that you overpaid the employee, do not print the on-site check. Please contact payroll support on December 30th for further guidance. If you did not use the mark as paid out option when processing your on-site check, you will need to make reverse quick entries during the payroll processing for the 1/3/25 paycheck. These quick entries are needed to stop retro timesheet adjustments from affecting this employee's next system paycheck. The quick entries will zero out any retro pay from being added to the employee's next paycheck, since you already accounted for the retro timesheet pay changes when processing the on-site check. Please reference the document, How Do I Stop Timesheet Retro Pay from Being Processed, posted to Freshdesk, or contact payroll support for assistance. If you discover that you need to void a check that was issued in 2024 and you already accepted your last payroll of the year, do not enter any voided checks or voided direct deposits issued in 2024 or prior in Dayforce once you have committed that December 20th paycheck. Wait until December 30th to contact payroll support for instructions, and we will assist you in entering a year-end off-cycle adjustment run. Voided checks needed after January 2nd will require issuing a W-2C and possible amended returns. The W-2C process in Dayforce is located in the year-end module and becomes available on January 6th. Please reach out to payroll support to help you with this process. Please note that W-2C forms are not available for printing until January 20th. Dayforce doesn't print or distribute W-2C forms for us. Once payroll support has created your W-2C, we will contact you and let you know how you and your employee can access and print the W-2C form from Dayforce. We will report the W-2C to Social Security Administration for you. We will then provide you directions on how to submit the W-2C to the employee's withholding state. W-2Cs created very early in January may not require amended returns. Are there any questions concerning processing pay adjustments after the December 20th payroll commit?
No questions.
Questions? No? Okay. Now Kathy will cover the entitlement rollover for parish employees.
Now let's review the first entitlement rollover of 2025. The leave rollover for eligible parish and daycare center employees will occur on February 1st. Dayforce will use employees' balances as of January 31st to determine the rollover. The rollover will occur in the following order. First, any vacation or sick time submitted or keyed through January 31st will reduce the leave balance. Then the appropriate rollover will be applied. For this year, the leave accruals are added using pay period ending February 7th, 2025. All leave taken on or after February 1st will be applied to the new entitlement year. The 2025 payroll calendar, payroll processing schedule, and payroll reconciliation spreadsheet are now available to download in Freshdesk under additional resources. Are there any questions?
No questions.
Now Terry will go over some important updates for 2025.
All right, so we'll start with the 1095-C. As you all know, 1095-Cs went into effect back in 2015. And at that time, we just had to submit those forms to the federal government. But over the past few years, some states have decided to implement their own requirements to receive a 1095-C form. And now that includes DC, New Jersey, Massachusetts, Rhode Island, Vermont, Connecticut, and California. And we have been saying for the past few years that Maryland is likely to follow, although it hasn't as of yet. Dayforce will handle the filing of your 1095-C forms. They'll do it to the federal government as well as any of these required states. But in doing so, they can only do it if you actually have an active tax account already established in that state. So it is very important to understand where your employees, current or former, who have received wages in 2024, where they lived during this year. Dayforce will actually look at their address history. And if they lived in any of these states during 2024, regardless for whatever the length of time was, they will assume that a 1095-C has to be filed to that state. And if you do not have a tax account established, that is going to cause an error. So it's important for you to understand that. And if you have not established a tax account in one of these states, and you know that that's going to cause then an error, it's important to start that process. And payroll support can help guide you through that. And then, of course, they need to be advised of any newly assigned tax account numbers. The sooner the better. There is an additional fee, obviously, when you establish new state tax accounts, and obviously fees for the individual 1095-C forms as well. For 2024, the tax rates for FICA, both the Social Security and Medicare, are remaining the same. But the taxable wage limit on the Social Security wages is increasing from $168,600 to $176,100, which increases the maximum Social Security tax withholding by $465 to $10,918.20. On the 403B side, the IRS has changed the limits in 2025. For those under the age of 50, there's an increase of $500 from last year, making the new limit $23,500. For those 50 to 59, there's been no increase from last year. It remains at $31,000. This includes that catch-up contribution of $7,500. But there is something new this year. So you may be familiar or heard about the Secure Act, which was passed in the end of 2019. And there are many aspects to the Secure Act that will be phased in over time, this being one of the newest. And so starting in 2025, for those who will be age 60, 61, 62, or 63 during 2025, there will be an additional catch-up allowed for a total of $34,000. Oh, there's a typo in there. $34,750. Employees can submit changes to their 403B any time of the year and as many times as they want. But if they're truly trying to take advantage of these maximums and they want that to start on their very first paycheck in January, then they need to submit their change directly through Empower by Tuesday, December the 17th. And as a reminder, those changes are done online through Empower at the URL there. And in addition to being able to enroll, stop, increase, or decrease contributions, they can also use that site to apply for loans, get benefit distributions, update their beneficiaries, etc. Okay, so this is a big announcement. Maybe some of you may have known this was coming by an email that I sent a little bit earlier today. We are changing our medical plan effective March the 1st. And while I can't speak to all of the things that are happening, one of the things I can tell you is that starting March the 1st, there will not be an HSA component to our plan. And because of that, the IRS actually requires that we have a prorated limit for our employees in 2025. So they cannot put in the maximum annual amount because the plan will only be in effect for 2 months of the year. So in essence, the contribution limit had to be prorated by 1/6. So employees will only be able to contribute to their HSA during the months of January and February to a max of $716 if they're single and under 55, $883 if they're single and 55 and older, $1,425 for family under the age of 55, and $1,591 for family age 55 or older. Like the 403B, changes need to be submitted to the Employee Benefits Office by December 17th if they are to take effect on that first paycheck in January. In the case of HSA changes, that is done in the form of an HSA payroll form sent directly to the Employee Benefits Office. The other piece of this is that the funding of health incentives, that's the free money that employees can get from the diocese if they participate in the wellness program. Beginning for those incentives that need to be funded after December, we are not going to make that funding directly into the employees' health savings accounts because we know if we do so, they will probably immediately be over their contribution limit, which will cause them quite a bit of pain and taxing implications for 2025. We want to avoid that. But of course, we do still want to provide those incentives earned through February. And so we are going to be doing that by payroll. There will be more details to follow. I will let you know that the intention would be to gross up those amounts because they will be taxed. And we want employees to not feel the effect of that. We know if they're processed through payroll, that means it's coming out of your bank account, your location's bank account and not ours. So we do know that there will have to be a refund process in place. Those are all things that we are trying to figure out now. This is something that we just learned about this past week. So certainly we have a little bit more time and we will make sure that we keep you and the employees well informed of how that's going to happen. Started talking about the change to the medical plan and that it's going to be significant, but also exciting. I think that employees will be really happy with our new plan design. We will continue to have benefit open enrollment through the entire month of January. But unlike past years, because of the significant number of changes to the medical plan design, we are going to be doing on-site open enrollment meetings throughout the diocese in almost every parish and school from January the 6th through January 17th. And I thank all of you online who helped assist in getting those meetings scheduled. That was quite a challenge and we appreciate your help and also appreciate your willingness to host us and the employees throughout the diocese. While we can't make these open enrollment meetings mandatory, we'd like to. We absolutely encourage full-time lay employees to attend a session, especially if they're already in the medical plan or they have any intention of joining it. I think it would be really helpful if they participated in a meeting. Certainly the open enrollment materials and the guides will be updated and they'll be available on January 1st and employees can read through those. But we think by attending a session, they'll have a much better understanding of the new plan design and how to make it best work for them. And there will be opportunities to ask questions and even meet with insurance representatives during that time. It is our intention to conduct a webinar on December the 12th for pastors, heads of schools, principals, preschool directors, business managers, and payroll processors. We want you to have a preview of the new medical plan. We're looking to you to understand the new plan and be our ambassadors. And this does not take away from your participation in an open enrollment meeting itself, but we want you to see that new plan in advance, be able to ask any questions, provide feedback so that if the materials need to be updated, we can do so before we go out on January the 6th. And then we'll be doing a webinar actually 2 days prior on the 10th for all clergy, including the religious order men and women. They will be getting a new medical plan as well. So they'll get to see their new plan design on the 10th. And because they do not need to participate in open enrollment, they will not be included in these meetings January 6th through the 17th, but we'll make sure that we do meetings probably throughout the deaneries during the month of February so that those clergy who have specific questions, want to meet with the insurance representatives can have that personal attention. As in years past, the open enrollment is going to take place through Dayforce. It's going to be specifically online. There's no options to make changes by paper, and late enrollments cannot be accepted. The changes that employees make during open enrollment are going to take effect on March the 1st, and new premiums will take effect on the paycheck of March the 14th. As of right now, we don't know what the new premiums will be. We'll know that in the next few weeks. What will be different this year and is really important, and so we've already started putting the message out there now and we'll continue to do so, is that this is not a passive open enrollment. This is an active open enrollment this year, meaning that employees must participate in the online enrollment in Dayforce during January in order to have medical coverage starting March the 1st. if an employee does not go in and do open enrollment, their medical coverage will end on February the 28th. And they will not have the ability to get back into the medical plan until the following open enrollment or unless they have a qualified life event. And so this is very important that employees understand this. Any kind of benefit billing changes for medical, dental, and the vision plans will be communicated sometime in December, once we know what those rates will be, and they will not take effect until your March billing. Any changes for life insurance, supplemental life, the disability plan, VEC, or pension will be announced in March, with those changes not taking effect until July, the new fiscal year. So the last slide I have actually requires an edit. Yeah, that's not because we made an error. It's because there was a ruling last Friday, November the 15th, that basically vacated the DOL's increase in the salary threshold for exempt employees. They do this to us all the time. So basically, we've been meeting with many of you since early in 2024 to help you prepare for this minimum wage increase that we were expecting for exempt employees. Basically, increasing the minimum wage to $1,128 a week, or the equivalent of $58,656 a year. That is now vacated, and meaning that is not going into effect. Okay, now the other thing that's really quite amazing is that you might remember that this was actually a two-part process. The minimum wage increased in July, and then it was going to increase again January 1st. This vacation, I guess that's what it's called, actually reverses it even before July. Yeah, it's as if it shouldn't have gone into effect at all. So the Department of Labor can appeal this court decision, but what I'm understanding is that with the results of the recent election and anticipated changes that are likely going to occur in the Department of Labor with the incoming presidential administration, it would probably be very unlikely. So what does this mean? This means that we have to regroup, and we'll be reaching back out to you who have been preparing to make changes on January 1st to talk about whether or not you truly want to go forward with that change. Certainly you could, if you've already committed, you budgeted for it, you like it, you're ready for it, that's perfectly fine. But if you weren't that crazy about it and you want to reverse, that would be okay as well, but obviously you'll have to go about that delicately. You've already kind of upset your employees, I'm sure. And so we'll try to help you through that. We just have to figure out the process ourselves. Now, that vacating is specifically on the minimum wage for exempt positions. The increase in the hourly positions, this is a minimum wage increase in the state of Virginia, that remains. So effective January the 1st, the minimum wage in the state of Virginia will increase to $12.41 per hour for those non-exempt hourly positions. So that definitely needs to move forward. And this should not be a surprise to any of you. And with that being said, that concludes the changes that are forthcoming from an HR and benefits perspective as far as we know. Are there any questions?
Yes, there is a few.
Okay.
So this question is regarding the 7 states that require the 1095. Only if the employee lived in one of those states while employed by us, correct?
That's right. That's right. So if you were to look at the employee's address history, if they have an address in one of those states that has that crosses into 2024, whether it started in 2024 or ended or it remains open, then a 1095-C will be required to be sent to that state.
And that's if it's defined as a primary address.
Okay, that's good. So Sandra's clarifying, it has to be a primary address, not one of the mailing addresses.
Are lay employees, business managers, exempt employees?
Are late employees? What is late?
Like.
Oh, lay, oh, I'm sorry. Are business managers exempt employees?
Yep.
It depends. So what you might want to do is look out on Freshdesk. There is a job class worksheet. The job class worksheet has all of the job codes that we have in Dayforce for our parishes and our schools. And it has a mini job description there. And it says whether or not that position can be exempt or not. In terms of being exempt, there's this big law called the Fair Labor Standards Act that tells us who can and can't be exempt. And there are 3 pieces to being able to be qualified as exempt. The first one is called a duties test. So does the employee's job description meet the duties outlined in the Fair Labor Standards Act that would allow it to be exempt? And I would say a business manager's duties would. But the second part of it is that you have to be paid a salary that's at least minimum wage. Okay, and that's why I said they may or may not be exempt. It depends on the salary that's being paid. And now that's just getting changed back again, right? So the salary is going to revert to $684 a week, which is like 35,000 and something. I don't have a calculator in front of me. So if you're a business manager truly doing the duties that are described, in that mini job description on the job class worksheet, and you're paid at least that minimum wage, then you could be exempt. If the answer is no to either of those, then you're not. You have to be paid by the hour and you're not exempt.
Will open enrollment meetings be offered in Spanish or any other languages?
Okay, thank you for asking that about the open enrollment meetings. So the open enrollment meetings will be held on site in English. There is one, sorry. We have a phone ringing in here. We don't know where that's coming from, so I apologize that that's happening if that's disturbing any of you. So back to the open enrollment meetings. The on-site meetings will be held in English. It is our intention after those meetings to do webinars for the weeks following that. And we do intend to do at least one, if not more, in Spanish, but I'm not ready to tell you what those dates will be. And we're not making a mass announcement about those webinars, mainly because we really want to encourage employees to come on site if at all possible, because we think that that's the best experience.
How soon can we get updated contract for guidance counselors?
Well, it's not that the guidance counselors' contracts are wrong. I mean, the templates that you had back in March of 2024 are accurate. It's just that some of those employees we thought we had to convert hourly. I think maybe what the question is, hey, Terry or Dana, you helped us change the contract to hourly, and now we'd like to go back. What's your availability to help us? And I would say, give us a call or send us an email and we'll work with you. I can't tell you the exact date. We obviously are extremely busy, but we understand the importance of helping you, and we'll do our best to get those done quickly.
Where is the list of job codes and job descriptions on Freshdesk?
It's under,
I believe it's under additional resources, but you can always search.
yeah,
You can always search job codes list on the search bar and
it should pop up. Yeah.
Well, it's called the job class worksheet. So if you search for that, you should find it. Or as Cindy said, in case you couldn't hear, it should be under the additional resources section.
I have several contracted teachers with vacation appearing on their entitlements that have been corrected since. But is there any way to correct that from happening in the system? Second,
It means use the right entitlement policy.
Right. If you look at the vacation schedule, or the sick leave schedule that's on Freshdesk, it tells you by job title or group what entitlement policy to use as a reference.
There isn't a way for Dayforce. The great thing about Dayforce is that it has a lot of flexibility. The bad thing about Dayforce is it has a lot of flexibility. So you are choosing, when you're entering a new hire or you're maintaining an employee's record, you are specifically choosing their work assignment, you're choosing their entitlement policy, their pay type. And Dayforce is not going to say, hey, that doesn't really make any sense for that job title. So it's very important that you pick the right entitlement policy or any of the policies. And if you do, then you will not have vacation show up on your teachers.
Will there be a deadline for spending HSA balances after we move to the new healthcare company?
No, that's the beauty of it, is the amount that's in your health savings account is your money and yours to keep, and you can continue to use it beyond February as you do today. Obviously, you should be using it for eligible medical related expenses, but there will be no deadline by which that money has to be used. You just can't contribute any more to it on a pre-tax basis after February 28th.
I used to do the payroll reconciliation every single month, but I heard some payroll processors do it on a regular basis. Is the reconciliation only recommended or is it required?
It's in your best interest to do it. I can't require you to do it, but if you have a out of balance situation with Dayforce Tax or with an agency, you're gonna have to go back and recreate the reconciliation to find out where it went wrong. So I would make it part of your payroll process. After you commit your payroll, take the last pages of the payroll summary report and just key them in that spreadsheet. Once you get used to it, it takes less than 10 minutes. So I would do it after each payroll, and then you're ready for the quarter. And then you can do your quarterly reconciling a lot easier. It goes a lot smoother and a lot quicker if you do it on a per paycheck basis.
It's definitely a best practice. It's one that we employ here. Sandra and her team use that, every payroll, that is just a standard part. They're not done with the payroll until they do that. And if there are any issues, then you've at least isolated it to that payroll. If you
Right.
wait until the month or the quarter or
at the
or
end of
really the
year.
end of the year,
Yeah.
that research is going to be really intense. And also, if you don't find out about errors until after the quarter's ended or after the year's ended,
Yeah.
there's actually greater concern there because that requires amended tax returns. Or could, and amended tax returns,
$250 each.
yeah, so you come with additional cost.
And especially, like year end, it adds up. It really adds up.
Yeah.
So, you want to make sure that you're reconciled quarterly or before the quarter ends so that you can avoid, it's the last Friday of the quarter. It's not my presentations, I don't remember. That you want to make sure that you're reconciling by so that you can fit it into that quarter and not have to do amended returns fees.
And what I would also say is that we can't absolutely say it's a requirement of the payroll department and it's not a legal requirement. But I'm not sure if internal audit has it as a requirement when they come out to audit you. They might. They might say, they might pick a particular payroll and say, let me see the reconciliation. So audit is under the finance helm, and so I don't know that for sure, but that may be a requirement that they have.
Right, so it's the last Friday of the quarter that you want to make sure, or prior, that you want to make sure you're balanced, because if you do need an off cycle to correct something, we can get it in there and then you wouldn't have amended return costs.
There's a question asking the location for the reconciliation templates. They're in the templates and forms section in Dayforce. And
In Fresh
sorry, in
Desk.
Fresh Desk.
Yes, they're already posted for next year and this year's are still out there.
And is the medical plan going to be a high deductible plan? And why are we getting rid of the HSA?
Okay, those are fair questions. So the medical plan, I think people are gonna be very happy with it because there are gonna be many services, including prescription drugs, that will no longer need to be run through the deductible first. They will be just co-pays. And that will be, I think, a great benefit to many employees to know that they can start going to the doctors, get whatever treatment, get their prescriptions, and not have to worry that they've got to go through the deductible first. But with our health savings account, there are specific criteria of the IRS that say what kind of a medical plan can and can't offer a health savings account. And because in this new plan, there is going to be this waiving of deductibles for certain things, we don't meet that criteria anymore. So we don't have an option. If we're going to move forward with this medical plan, we do not have the ability legally to continue to offer a health savings account.
Is it possible to have notifications pushed to us when 941s are available in Dayforce tax?
I'd have to pose that question to Dayforce tax people and ask them. We used to get one.
Yes.
I don't know why
We
it
don't
stopped,
get it anymore.
so I can reach out to them and see.
That would be nice.
And that is all.
That's it?
Yes.
Wow. Wow. Well, I really want to thank all of you. Oh, there's something, do we know what that 15 is? Or there could be there more questions here?
Because I haven't gotten.
Oh, I
They're still
see.
in
Okay,
there.
those are the questions. Okay.
All right.
So I want to thank all of you for participating today. Again, I know it's a really busy time of year. I realize that this stuff isn't the most fun to sit through and hear, but it is really important for us to share this with you and hoping that you can have a really smooth next couple of payrolls and year-end process and truly be able to get enjoy the holidays and kick off the new year, with a bang. So thank you all for participating. From all of us, we wish you a really happy Thanksgiving.